Here are the crypto top headlines covered in this video. ARK's Cathie Wood sees short-term effect of spot Bitcoin ETF as sell on news. Next, the future of NFTs is bright, says RARI Foundation strategy head. Also, spot Bitcoin ETF could result in millions of unbacked BTC, Analyst says. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, ARK's Cathie Wood sees short-term effect of spot Bitcoin ETF as sell on news. ARK Invest CEO Cathie Wood expects some investors to sell on the news of spot Bitcoin ETF approval in the short term, but the long-term perspective is promising. Growing anticipation around the potential approval of spot Bitcoin exchange-traded funds, or ETFs, could negatively impact the BTC price in the short term, according to ARK Invest's CEO. Cathie Wood, founder, CEO, and chief investment officer of ARK Invest, believes that some investors are likely to sell on the news once a spot Bitcoin ETF is approved by securities regulators in the United States. Wood expects that some investors will not want to miss the opportunity to take some profits, as there has been a big anticipatory move based on the expectation of potential approval of a spot Bitcoin ETF, she said in an interview with Yahoo Finance on December 26th. The ARK CEO stated, "Those who have been moving in and enjoying some nice profits will probably sell on the news. That's an expression that traders use, so you anticipate the event, beat up the price, and then sell on the news." While the short-term impact of potential spot Bitcoin ETF approval could be associated with some investors selling, the long-term perspective is promising and more important, according to Wood. That would be very short-term because what we think is going to happen here is that the SEC is going to be given the spot Bitcoin ETF the green light for institutional investors to participate, the investor stated. Once approved, a spot Bitcoin ETF will become one of the easiest ways for institutions to access BTC, allowing them to allocate a small portion of trillions of dollars in assets to Bitcoin, the ARK CEO believes. According to Wood, Bitcoin's price would move significantly if institutional investors put at least 0.1% or 0.2% of their assets into Bitcoin, which has a supply cap of 21 million coins. Wood's ARK Invest is one of 14 firms that have filed for a spot Bitcoin ETF with the U.S. Securities and Exchange Commission. ARK's spot Bitcoin ETF, the ARK 21 Shares Bitcoin ETF, is developed in collaboration with the European crypto exchange traded product provider 21 Shares. In her latest interview, Wood noted that spot Bitcoin ETF discussions with the SEC have been very positive, adding more optimism about the potential of the first spot Bitcoin ETF or ETFs being approved by January 10th. Something did change within the last month to 6 weeks, Wood stated, adding that the SEC has changed its approach to the Bitcoin ETF reviews from silent denials to asking thoughtful, detailed, technical questions. According to Wood, that's a very positive move that has led to fruitful dialogue with the SEC. I think the outlook is bright for a spot Bitcoin ETF, and we do think it will be in January, Wood stated. Our next top headline, the future of NFTs is bright, says RARI Foundation strategy head. Jana Bertram, head of strategy at RARI Foundation, tells the Agenda podcast that the use cases for NFTs go well beyond digital art. After a meteoric rise beginning in 2021, the non-fungible token, or NFT market, took a bit of a tumble in 2022. The floor prices of many projects gave way, particularly those centered around digital art, and many had declared that NFTs were dead. While sales volumes have begun growing again in 2023, they have not yet returned to the levels seen during the heights of the previous euphoria. Yet non-fungible tokens as a technology have not actually gone anywhere, and many builders took the now thawing crypto winter as an opportunity to continue developing relevant products, platforms, and use cases without the pressure and constant media attention of a bull market. One such NFT ecosystem that continued building during the bear market is Rarible, which comprises the Rarible protocol, Rarible Marketplace, RARI Token, Rarible DAO, and RARI Foundation, with a new Layer 3 mainnet, VeChain, on the way. On episode 26 of the Agenda podcast, host Jonathan DeYoung and Ray Salmon spoke with Jana Bertram, head of strategy at RARI Foundation, about what makes Rarible unique, how the NFT market can become sustainable, the future of non-fungible tokens, exciting use cases, and more. Ever since NFTs exploded in popularity, the technology has maintained somewhat of a poor reputation in the mainstream and even in some crypto circles. Many people see them as just speculative assets, bad for the environment, and/or a complete waste of money. Related to this, most people in the mainstream strictly associate NFTs with digital art. Bertram acknowledged this issue, telling DeYoung and Salmon that NFTs, like anything else, have faced criticism due to people's past experiences. As for whether NFTs need a complete overhaul, rebranding something that's very common business practices, she said, and I think you can go through several iterations and probably will never have the final and formal form of how you call NFTs, right? I'm personally okay with NFTs, especially when you're talking to a Web3 audience, Bertram stated, adding, but imagine a world in which it doesn't actually matter that it's an NFT. You know, maybe it's just your membership ID, and who cares that it's an NFT on the back end, and that's how it actually functions, right? To the end user, that doesn't mean anything. The most well-known NFT use case remains digital art, and one criticism that has affected branding is the argument that I can just download the JPEG, so why would I pay money for an NFT? At the same time, many people simply prefer the experience of having a physical piece of art. According to Bertram, there are ways to bridge the gap between the physical and digital, offering collectors the benefits of both. Me and my husband were big fans of this British artist called Matthew Stone, she shared. We own his NFTs, and every time we purchase the NFTs, the painting arrives as well, right? And we have that hanging on the wall. So yeah, there are like different ways to make the NFT tangible. Expanding NFT use cases. Beyond the art world, Bertram pointed DeYoung and Salmon toward the many other use cases for NFTs beyond just art. There should be a world in which your homeowner association membership is an NFT. Your rental contract is an NFT, she shared. There's a lot of forms of ownership that you can digitize through the NFT as a technology. And then there's, of course, also the whole aspect of IP or intellectual property, and just using NFTs as a technology for ensuring IP is respected. DeYoung asked Bertram whether or not there were any particularly interesting sleeper use cases for NFTs, with Bertram bringing up things such as fungible collectibles, token-bound innovation, and intellectual property. As to whether NFTs will fundamentally change modern society, Bertram shared, I don't know if we're shaking things up entirely, but I think the whole bakery is shaking things up, right? Not necessarily just NFTs. So the whole thing put together really is redefining how we operate as a society. The fact that you have all these DAOs that have contributors from all over the world, across different cultures, across different economies, right? The fact that you can pay people cross-border without intermediaries, All of that has revolutionized the way we do things already, and then NFTs are a piece of the puzzle there. Our next top headline, Spot Bitcoin ETF could result in millions of unbacked BTC, Analyst says. Spot Bitcoin ETFs may take people further from self-custody and potentially create millions of unbacked Bitcoin, Trezor's Joseph Tetek believes. Potential approval of a spot Bitcoin exchange-traded fund in the United States will trigger fundamental problems related to the original vision of Bitcoin by the anonymous creator Satoshi Nakamoto, according to one analyst. The concept of a spot Bitcoin ETF, an investment product that tracks the price of BTC by holding Bitcoin, conflicts with the idea of self-custody, according to Joseph Tetek, a Bitcoin analyst at the hardware crypto wallet firm Trezor. Unlike a Bitcoin ETF, self-custodial crypto storage solutions allow users to own Bitcoin by taking full responsibility for holding the private key, or the actual assets. In principle, spot Bitcoin ETFs take people further from self-custody and potentially introduce a systemic risk, as ETFs will be safer on the surface than exchanges, Tetek said in an interview with Cointelegraph. One possible consequence of spot Bitcoin ETF approval could be that large quantities of BTC would be stored in central locations where the government could seize them, the analyst said, referring to a scenario seen with the confiscation of gold in the United States in the 1930s, Tetek added. And while a spot Bitcoin ETF would make exposure to Bitcoin price movements more accessible to individuals and institutions alike, simply buying Bitcoin through conventional means would offer the same exposure. Do we really need ETFs for this? Another significant issue with a spot Bitcoin ETF is that ETF holders will not have the option to withdraw the underlying asset. Instead, these assets are held in aggregate by the ETF itself, which raises the possibility of the unchecked issuance of paper Bitcoin not supported by actual Bitcoin, the supply of which is capped at 21 million coins, Tetek noted. The analyst stated, "The result could be the creation of millions of unbacked Bitcoin, which would distort genuine markets and depress the value of real Bitcoin, all while handing greater agency to the giants of centralized, traditional finance, the very antithesis of Satoshi's original vision." Tetek's remarks on self-custody versus spot Bitcoin ETFs flag a potential downside amid the growing optimism on the market, with various firms and analysts expecting U.S. securities regulators to approve a spot BTC ETF in January 2024. Not everyone has been optimistic about spot BTC ETFs, though. Arthur Hayes, co-founder of crypto exchange BitMEX, believes that spot BTC ETFs could completely destroy Bitcoin if they are too successful. If not Bitcoin, such ETFs will likely compete with centralized crypto exchanges like Coinbase, as ETF fees are expected to be lower than those on exchanges, according to some Bloomberg analysts. According to quantum economics founder Matti Greenspan, there is no direct conflict between self-custody and spot Bitcoin ETFs because retail users will stick to self-custody. Personally speaking, I would never buy any sort of paper IOU forms of Bitcoin, but that's because I have the option of self-custody, Greenspan told Cointelegraph. Most institutions don't have that option, he added. There are zero advantages and plenty of disadvantages for retail investors to hold Bitcoin ETFs. Way better to just hold Bitcoin, Greenspan stated. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.